Hello everyone, welcome to MI Academy, and today in this video we are going to study the grade 10 chapter 6 of the business studies, dual impacts of transactions. If you have not still subscribed to MI Academy, then click the subscribe button and turn on the notification bell icon to all, so that you can watch my upcoming videos without missing. First of all, let's look at what we are going to study in this chapter. First we will see what is meant by dual impacts of business transactions. Then the double entry system. Then accounts and the types of accounts. At last we will look at how to record transactions in the accounts. So let's see what are dual impacts of business transactions. Many transactions occur daily in a business. As a result of these transactions, the values of assets, liabilities, equity, income, and expenses are changed. In accounting, these changes are identified as a dual impact of a transaction. As explained earlier in the last chapter under accounting equation, each transaction causes change to two items in the accounting equation. This is termed as the dual impact of a transaction. Examples: investing capital, here the cash increases, and the equity increases. Purchase of furniture, here furniture increases, and cash decreases. Payment of salary, here cash decrease, and equity decreases. Because of this dual impact of each transaction, the value of each transaction should be written in two places. This means there should be two entries for each transaction. However, when the business expands, a large number of transactions could take place. In such a case, recording those transactions in an accounting equation may not be practical. Even though we could record those transactions in the accounting equation, it is very difficult to obtain information clearly whenever necessary. Therefore, the dual impact of transactions are usually recorded in accounts according to the double entry system. Now let's see what is double entry system. As mentioned, the dual impact should be recorded in accounts. When recording the dual impact of a transaction, the same amount has to be recorded in two separate accounts. Each account has a debit and a credit side. If a value of a transaction is debited to a particular account, that value also should be credited to another account. This system, which records the same amount in debit and credit sides of accounts, is called as the double entry system. So first of all, before recording transactions in the relevant accounts, we have to know what is an account and the format of it. Account is the structure that is used to record the change of an asset, an equity, a liability, an income, or an expense for a time period. So this is the format of account. So before recording the transactions, you have to draw the format of the account like this. So you can see this has two sides, debit side and credit side. So you have to mention the name of the account, then write debit in the left-hand side and credit in right-hand side. The date of the transaction, the description, and the amount. But in this LF column you no need to mention anything, you can just draw and leave it blank. But for our ease of use we can draw it like this. This is known as T account, because you can see it's like T-shape. Then we have 5 types of accounts. Assets account, liabilities account, equity account, income account, and expenses account. Examples of assets account are building account, debtors account, cash account. Examples of liabilities account are bank loan account, creditors account, electricity expense payable account. Examples of equity account are capital account, drawings account. Examples of income account are sales account, sales commission income account, interest income account. Examples of expenses account are salary account, insurance charges account, electricity expense account. When recording business transactions in accounts, the value of a transaction should be either recorded in the debit side or the credit side of the relevant account. Let us consider how to record such transactions in accounts, and how to record them correctly as debit and credit. Now we have to know first, in which instance we have to debit and credit. So if we look at this table you can see that Accounts are debited or credited to show the increase or decrease of assets, equity, liabilities, income, or expenses due to transactions. However, debiting to an account does not always mean an increase. To show an increase, some accounts are debited, and also to show a decrease, some accounts are debited. This is same for the crediting to an account. This creates a problem, which is how to debit or how to credit accounts to show the increase or decrease of an accounting element due to a transaction. There are some generally accepted principles in accounting which address this problem. These principles are called as the principles of double entry. There are 5 principles for the 5 types of accounts. They are shown in the following table. For an asset account, if the value of the asset is increasing, then it's recorded in debit side. But if the value is decreasing, then it is recorded in credit side. For a liability account, if the value of the liability is increasing, then it's recorded in credit side. But if the value is decreasing, then it is recorded in debit side. Then for equity accounts, if the value of the equity is increasing, then it's recorded in credit side. But if the value is decreasing, then it is recorded in debit side. Then income accounts, if the value of the income is increasing, then it's recorded in credit side. But if the value is decreasing, then it is recorded in debit side. Then for expenses accounts, if the value of the expense is increasing, then it's recorded in debit side. But if the value is decreasing, then it is recorded in credit side. So let's look at the examples. Purchased a machine on January 3, 2022 at Rs 500,000. Double entry is, machinery account debit Rs 500,000, cash book credit Rs 500,000. It's because machinery is purchased using the cash in business. So we are receiving an asset worth Rs 500,000, so it's debited by Rs 500,000 in the machinery account. And we have to write the description in the debit side of an account. We can write it as cash since we have purchased it using cash. And since our cash is going out of the business, it's decreasing, so it's recorded in credit side of the cash book. And we have to write the description as machinery since we are using the cash Rs 500,000 to purchase machinery. Then let's look at another example. Obtained a bank loan of to Rs 200,000 on 4th of January. Double entry is, cash account debit Rs 500,000, bank loan account credit Rs 500,000. It's because bank loan is received as cash to the business. So we are receiving an asset worth Rs 200,000, so it's debited by Rs 200,000 in the cash account. And we have to write the description in the debit side of the account. We can write it as bank loan since we are receiving cash as bank loan. And since our liability is increasing, so it's recorded in credit side of the bank loan account. And we have to write the description as cash since we are receiving cash Rs 200,000 as bank loan. Then our next example is the owner invested Rs 300,000 as the capital on 5th of January. So here we can write the double entry as, cash account debit Rs 300,000, capital account credit Rs 300,000. It's because capital is received as cash to the business. So we are receiving an asset worth Rs 300,000, so it's debited by Rs 300,000 in the cash account. And we have to write the description in the debit side of the account. We can write it as capital since we are receiving cash as capital. And since the equity is increasing, so it's recorded in credit side of the capital account. And we have to write the description as cash since we are receiving cash Rs 300,000 as capital. So up to now we can see when we are recording each of the transaction, if one account is recorded in debit side, then the other is in credit side. So that the values are equal. It's similar like what we did in the accounting equation table in our last video under accounting equation chapter. Let's look at another example. Received an interest income of Rs 20,000 on 5th of January. Then we can write the double entry as, cash book debit Rs 20,000, interest income account credit Rs 20,000. It's because we are receiving cash to the business as an interest income. So we are receiving an asset worth Rs 20,000, so it's debited by rupees 20,000 in the cash book. And we have to write the description in the debit side. We can write it as interest income since we are receiving cash as interest income. And since income increases the equity, we know that when equity increases it should be recorded in credit side of interest income. And we have to write the description as cash since we are receiving cash. So let's look at another example. On 6th of January, paid salaries rupees 20,000. Then we can write the double entry as salaries account debit rupees 20,000, cash book credit rupees 20,000. We know that salaries is an expense. Since expenses decreases the equity, we know that when equity decreases it should be recorded in debit side of salaries account. And we have to write the description as cash since we are paying cash. So here cash worth rupees 20,000 is decreasing, so it's credited by rupees 20,000 in the cash book. And we have to write the description in the credit side. We can write it as salaries since we are paying cash as salaries. So until now we have studied the double entries, so I hope you have understood that how to record these simple transactions in this accounts. And here there is a small topic called as ledger. Accordingly, there can be many asset accounts in a business such as motor vehicle account, furniture account, cash account, etc. Similarly, there can be many accounts for each type of equity, liability, income, and expenses in a business. Therefore they all should be organized properly. A collection of all accounts is called as the ledger. Therefore, recording business transactions in accounts is also named as recording business transactions in the ledger. So I think now you all can understand why we have a column called LF in the accounts table. LF column is known as ledger folio column. In that column you have to mention the page number of the account that is used to record the other entry of the transaction. So that's all in this chapter. And we have come to the end of our video. Let's discuss the next chapter in the next video. So please give a support to us by subscribing to MI Academy, and also please like my videos, and add up your questions and doubts in the comments. I will try to reply them as soon as possible. Share the videos with your friends, and help them to learn quickly and easily.